Namaskar, Monday. Thank you for big response for the learn. Today we have Vikram Gore as our guest speaker, and today's agenda is introduction, then talk by Vikram for around 40 minutes, and question answer for 20 minutes. So Vikram is very jolly person. Many might be knowing the Marathi Shah which was running in Simi Valley previously. When it was time to move the forward Shah, Vikram taken initiative to move the Shah to the Thousand Oaks and running it successfully with community help. If anybody is interested in Marathi Shah, let us know. So Vikram is investing in stock market for over last 12 years and in options for 7 years. He has a YouTube show called Market, Malls and Machines that focus on stock market, single market scotch, and the best value luxury cars. So please subscribe to his channel if you are interested. He also follows several wealth managers on the Twitter, podcast, and economic report to keep his ear on the ground, reading regarding the stock market. Today he'll be covering about microeconomic environment, trader versus investor, conventions, aggressive versus conservative portfolios. So let us hear from his thoughts. Vikram, all yours.
Hey, thanks, Chaitanya. By the way, I'm assuming सगळे मराठी बोलतात का? Anyone not speaking Marathi?
think सगळे मराठी आहेत.
Marathi आहेत ना? Yeah,
Marathi.
so I mean, okay. I mean, नसेल तर सांगा मी त्याप्रमाणे I'll change it. And I think I'll do a mix of Marathi and English याच्यामध्ये. आणि hey, the intent here is मला just sharing what I know and what I've learned, right? So त्यांनी चैतन्याने दाखवलं की शेवटी Q&A आहे तर feel free to ask questions मध्येच आला तर the whole point here is exchanging experiences and learning from each other, right? So that's kind of the theme here. So with that, मी आता पहिले माझं हे share करतो. Tell me if you're not able to see it. I'm going to share something. दिसतंय तुम्हाला?
हो दिसतंय.
Okay, great. So, हे जे टॉपिक्स मी निवडले त्याच्यासाठी की बरेच लोक डायरेक्टली म्हणतात की अरे कुठला स्टॉक मी विकत घेऊ. माझी आता सर्जरी झाली आणि माझा फिजिओथेरपिस्ट म्हणत होता म्हणजे तुला सांग ना कुठला स्टॉक मी विकत घेऊ. सो आय मीन दॅट्स वेअर द इंटरेस्ट स्टार्ट्स. पण अनलेस यू हॅव युअर ओन पॉइंट ऑफ व्ह्यू आणि तुमचं स्वतःचं रिसर्च केला आहे, आय थिंक इट्स व्हेरी डेंजरस टू जस्ट buy a stock or option because somebody is telling you, right? So hey je 3-4 slides just to get some of the basics out of the way, so that you can start to form your own opinion on protect stock or not, right? So overall, backdrop काय आता गेल्या वर्षीचा from a macroeconomic perspective, right? So number one, गेल्या वर्षी एका वर्षात फेड's बॅलन्स शीट वाढली 3 ट्रिलियन आणि ते मोस्टली मॉनिटरी होतं. मॉनिटरी म्हणजे इट्स ऍक्च्युअली मनी, राईट? सेंट्रल बँक फेड रिलेटेड, they increase the money supply, but it mostly was from a monetary policy. म्हणजे मोस्टली ते bank loans purchases, asset guarantees. So most of that money went into kind of banks balance sheets, if you will, or shoring up reserves, right, for banks. So 2008-9 मध्ये जे टॉर्प आलेलं, that was $700 billion, right? And that all went into, it was all monetary, it all went into shoring up the bank's reserves. So the actual economy मध्ये काय आलं नाही, it just went into bank's reserves. But that was 700 billion, and it was done over a period of I think 3 years, 2 to 3 years. आपण गेल्या वर्षी 3 trillion वाढली आहे in a matter of months. So that's just one data point, right? दुसरं म्हणजे आता बायडनचं स्टिम्युलस प्लॅन आलाय, which is about 1.9 trillion, which is going to be mostly fiscal. The difference monetary and fiscal मध्ये काय आहे की this is going to be actual checks that will go into people's hands. Whatever, 1,500, 1,000, wherever they end up. This is actually going to go into people's hands, not on bank balances and reserves. So त्याच्यामुळे they expect to stimulate the economy. आणि त्याच्यामध्ये 2-3 अजून बॅक स्टोरी त्याच्यात अशी आहे की गेल्या वर्षी credit card debt was one of the lowest in a decade or so. That's number one. Savings was one of the highest that you've seen in a few years. And there's no place for you to spend the money. So, hey, extra 1.9 trillion as the economy improves, all of this, not all of this, most of it will get spent. Some of it will go in the stock market, maybe GME stock, if you know what I'm talking about. Others will go into actual buying things, right? So this is mainly fiscal, and this is what we expected to have a big impact on the economy, right? Thirdly, interest rates, historic lows but rising. I don't know if anyone has had a chance to refinance your house loan, home loan, or not, but this is still a pretty good time. November, December would have been the best. I think the 10-year treasury was at a 700 basis points, so 0.7%. I think it's gone to 1.16 or so. So it's gone up significantly. But the expectation is interest rate study. The expectation is that it may not impact the stock market until it goes to 1.5, 1.6. So 1.5, 1.6, like the treasury, 10-year treasury rates gale, that's when the stock market may actually start slowing down. Okay. But until then, as rates rise and bond yields rise, it's an expectation that economy is improving. So companies will do better. So this is kind of a sweet spot. It is historically very low, but rising, which means it's a forward-looking. It's a great time. Okay, so that's that. So that's the third thing. Fourth is obviously expected global economic recovery. Right, it gets pushed out thanks to vaccines delayed or new strains coming out. Adi Watalaki, by the end of Q1, we will have a recovered, a significant amount of recovery started. Most economists believe it's got pushed out into middle of Q2 or end of Q2. But nevertheless, it's a question of if. It's not a question of if, it's a question of when, right? So we know. I mean, from that perspective, I don't think, knowing the future probably has been this easier from an economic standpoint than now. You know what to expect. And in Tarawik, some of it has been baked into the stock market already. Some of it has not. Nobody really knows what percent is actually baked into the prices in the stocks, right? But it's definitely expected. I mean, atta's Amazon and Google earnings zale, and I have never felt this level of conviction that the stock will go up after earnings as I did this time around, right? So it was a good time to play some options bets and make some money. It was pretty, it was there were very few things that would cause the stock to drop. Now, the Amazon was a surprise. Jeff Bezos retiring as a CEO, so that's what caused the stock to drop a little bit. But overall, the numbers were phenomenal, and so the stock dropped a bit, but it's higher than it was then. So anyway, from a forward-looking standpoint, ASA with certainty saying that by the end of Q2 or end of the year, let's say, economy is going to recover, and hence we expect better things. It's never, I don't think anybody could say that with that much conviction before. By the way, if you have any comments, questions, or maybe even disagreements, feel free to jump in. I'd like to have this as a discussion than just a solo talk. Okay. Any thoughts on any of these so far? Or do you agree or disagree?
Yeah, so hey, this is Prashant. Hello, Vikram. Prashant Vaidya. Just a question about the overall valuation of the stocks. I understand what you are saying and I agree to some extent. But at the same time, right now, a lot of stock market, you can say the is more based on these some of these main stocks, right? The Apple, Google's, Amazon's, etc. So if you consider that, the overall the valuation of various companies. So maybe can you comment more on that one?
Yeah, yeah. So by the way, so until October, November of last year, the leaders, Google, Amazon, Apple, the FMAGA, right?
Mhm.
Trade, they were the leaders, but they have been flat to consolidating or flat since November. जेव्हा वॅक्सिनची न्यूज आली, and since then, the Russell 2000, which represents more the small cap, and like our IWM, which is the ETF, those things have exploded. You know, so 30% ni 30-40% ni varti gele sagre. So the thing is, it's not concentrated anymore. That's the other thing. So the number of stocks in the S&P 500 that are at or above their all-time highs is now gone to 90 plus percent. So that tells you that there's a significant level of breadth in the rally. And asastana, it takes some significant headwinds for the stock market to actually fall because there is such breadth, right? So it's not the top 4 or 5 anymore, it's the other stocks. So there's a significant amount of breadth, and it's all driven by in the economy opening and the expectations on people spending all that money that was never there before, right? This was basically created out of thin air. So that's I don't know, does that answer the question?
I think yes, to some extent, yes. But at the same time, I mean, there are a lot of the stocks which are definitely overvalued. And this is something which I recently read or heard. The average PE ratio has gone up from, somewhere between 16, 17 to almost now 21, 22. And overall, if you look at the entire breadth of the market.
21, 22 seems pretty good, actually. I think it's gone maybe even higher than that. So as a comparison point, 2000 मध्ये .com bubble burst झाला ना,
Mhm.
तेव्हा PE ratios were around 60 to 80.
Mhm.
So, I mean, we got ways to go. There are some that are out there. I mean, some of it is just speculative, right? You got to put that aside. I mean, you don't want to talk about GME and all that nonsense, right? But that's one thing. Second is the whole valuation business. I think people have miscalculated from a valuation standpoint what actually means, and the reason for that is the growth stocks, right? They have basically defied previous valuation metrics. So you may think, okay, Amazon, or मला आठवतंय मी मतलब पहिल्यांदा जेव्हा the first Amazon stock I bought was for $89, and it's at
Wow.
$3,300 now, right?
Yeah.
So, and that was in 2009. I bought it for $89. Every year I kept thinking, man, this valuation is crazy. I should sell, right? But it never stopped. So the question is, forward looking, what can these companies actually do? Forward looking, can they grow? Is there room to grow? One. And then two is, you have to, you cannot lose sight of this first 2 bullet points, in my opinion. हे म्हणजे न भूतो न भविष्यति, भविष्यति who knows, but न भूतो झालेलं आहे, right? I mean, we're talking about 5 trillion in 1.5 years.
Yeah, and on the top of it, I think this 1.9 trillion is just something which is coming on the top of, what about another 2 or 3 trillion which they have added in the last 6 months, right? A 900 billion stimulus which was passed in December, and another 2 trillion or whatever which was passed. This is on the top of how much Fed has put in the money.
Yeah, exactly.
That's pure the same stimulus.
That's right. When that happens, that money, especially the newer 1.9, it's gonna go into people's hands. So you're gonna see some, and त्याच्यामुळे for that and vaccine from November, if you see what's happened to all the small cap stocks, all the energy stocks. I mean, look at energy, look at oil. It's on fire, right, since November. And in November person, Google, Amazon sort of flattened. Okay. Well, after earnings, Google has taken off, but until earnings, it was flat. So yes, is there fraud? Absolutely. So the question then becomes, it's a question of timing, right? And to me, investor a trader that also matters. So I'll come to that next.
So Vikram, one point I think because of this stimulus and all this money coming in people's hand, what do we see the impact of it on the inflation rate going forward?
Yeah. So which is great, which is a good segue, right? So ಹೆಚ್ಚಾಮಳೆ dollars value ಕಮ್ಮಿ ಹೋಗ್ತಿದೆ, right? Because as you print more, your GDP, you're basically taking on more debt. Your debt as a percent of GDP is increasing. So the value of the dollar is decreasing, and that's the point too, right? Part of what the Fed is trying to do is your debt. The only way to repay that is to devalue the currency, so you don't actually repay the actual full amount. You're repaying the less amount because the value of the dollar is depreciated. So that's the point. That's what Fed is trying to do. Okay. So yes, but when that happens, you can expect secular inflation. Now, secular inflation is slightly different than cyclical inflation. Maybe even longer. We haven't really seen major inflation. And part of the reason, despite the fact that the stock market has grown, we haven't seen major inflation. And main part of the reason is that technology has been very deflationary, right? So, all these stocks, I mean, look at what we can do with this one phone. It has replaced all the things that you could do that you needed different appliances for. So technology is very deflationary. But at the same time, the 700 billion of TARP actually went and sat on banks' reserves. It never got the velocity of money. So there's two things that cause, you have to look at inflation. One is the money supply, M2, broad money supply. And the second is the velocity of money. So money supply wadla by 700 billion in TARP, 2008-9 but the velocity never increased. And now you're talking about 9 trillion in excess money supply. And because 2 trillion of that is in people's hands, there's expectation of the velocity of money increasing. So people are actually going to spend that. And as a result, you should expect some level of inflation. Now, inflation, sir, I look at 2-3 different aspects for inflation, but one of the ones they track cyclical inflation. It's called ECRI, Economic Cycle Ratings Institute, I believe, ECRI. He's an Indian, Lakshman Achutan. So that whole organization tracks cycles of inflation. They can actually see if its inflation is getting slower or is going to pick up. So I use that to figure that out. There is no doubt in most people's minds that inflation will happen. The question is, kitty fast and kitty high, right? But so that's when you start looking at the actual interest rates and will the Fed step in and raise interest rates? And if so, at what point, if inflation happens, right? One of the things that's happened is Fed has changed its discussion on inflation. It's a target rate of the 2%, right? But now they've gone with an average inflation target. So that means if you were below 2% in the last 12 months, you could be above 2% in the forward 12 months, with your average inflation being 2%. So they're okay, inflation going above 2%. If it goes to 3%, they still be okay because it was 1% year before. So the short answer is absolutely inflation is going to happen. So you need to protect yourself from that, right? So inflation hedge, in the short term. So me a podcast I was listening to a podcast that was on a different channel. It's called Macro Voices. So a hedge fund guy, and this guy has his own podcast. It's 60 minutes long. So it's pretty long, like 60 or 90 minutes usually. But anyway, so he brought in a economist and so he was talking about inflation. He was saying the Fed may not jump in until inflation hits, or rather, until inflation hits 4%, he's not that worried. But after 4%, all hell can break loose. So 4% in his mind was the key number for inflation. But by the time it gets to 4%, a lot of other things are going to happen, right? Fed may increase interest rates. If the Fed increases interest rates, all your major trades, the tech trades that benefited from low interest rates, they will take a hit. There's no question. Amazon, Google, they will take a hit. If Fed increases interest rates, they will take a hit. So you need to be balanced from that perspective. Anyway, I'll just pause there. Any other comments?
So I think, Vikram, one question, people don't know how to invest during that secure inflation. So are you going to cover that later?
Yeah, sure. Actually, ह्याच्यात तसं नव्हतं ते, but I can certainly talk to it. I'll pull up something else that I had put together. My video मध्ये टाकलाय YouTube मध्ये, but I can cover that here. Okay.
Okay, thanks.
All right. Okay, so the question, एक question मी विचारेन सगळ्यांना की, do you think, how many of you have time to trade on a weekly basis?
I do it already for quite some time.
अच्छा, कौन है? Sorry.
Ishwar.
Okay, Ishwar, you are. Okay, who else?
Vikram, I'm Milan. I can do it, but the challenge has been where to get started. That's been the biggest question. How to select the good stock. You get into a lot of material, and that's where you get lost.
Okay. So there's two people who have the time to trade on a weekly basis. Most others are kind of not so much time. So the reason I'm
one more, sorry, Vikram, Sudesh here. I will join that, so I will also have time.
You have, okay, all right, got it. So me prashna vicharte vicharla ki usually it's important to clarify, are you an investor or are you a trader, right? For investors, typically longer term view, 10 years is probably a bit too long, but that's what most investors look at. The Harshad, if you can get 8% or 10% compounded annual growth, then that's brilliant, right? So that's what they're looking at. So they don't care what they're thinking about long term. Some of you may already have a money manager, right? So they're charging you what, 0.8%, 0.7% or 1% fees to manage your money, right? But they're looking at longer term. They're investors. So you don't have much time, right, to trade on a weekly basis. So that's also investor characteristic. But the main strategy is to dollar cost average, right? You say every month I'm going to invest, I'm going to pick a number, $5,000. And I have, let's say, 3 different ETFs. One is the SPY, which gives me exposure to S&P 500. Second is IWN, which I talked about, which gives you an exposure to Russell 2000, which is small cap. And let's say the third is, for purpose of discussion, QQQ, which is NASDAQ-based ETF. So let's say you're going to split these three, split your 5,000 evenly across these 3 ETFs every month. And every month, on the 15th of the month, you buy. No matter what the price is, if it's gone up or it's gone down, you buy. 15th of the month, 5,000 split evenly across the 3. And when you do that, sometimes you're going to buy on the upswing, sometimes you're going to buy on the down. And that's what it means by dollar cost average, right? So over a period of 12 months, you have dollar cost average. This is very powerful, by the way. I mean, a lot of times this is 80% of the solution. Because it takes out emotion, it puts some discipline, and because it takes out emotion and puts discipline, it allows you to stay in the market for the longest amount of time. So just because you don't have time to trade doesn't mean it's bad. it's actually really good. I mean, just as an anecdote, 80 billion of 85 billion of Warren Buffett's fortune, he made it after he turned 65. Just think about that. I didn't know that. I didn't know that until yeah, I didn't know that until last month, right? Or 2 months ago. Me pustak wasta akade khali gungalo. So there's a really good book. It's called Psychology of Money, by Morgan Housel. It's brilliantly written. So that's what I read, and I couldn't believe it. And the reason he says that is to talk about compounding. Okay, the first third of your time in the stock market is the most boring time. The middle third gets interesting, and the last third is where it's all exciting, because you've gotten some critical mass, then gets compounded, and that's what's happened with Warren Buffett. Right, he started investing when he was 11 years old, right? And by the time he became 60 plus, he had made what, 5-6 billion, whatever, 5 billion. But then that 5 billion from 65 to 80 or 85, whatever his age is now, went to 80 billion, right? Or 60 billion, but that's what compounding does. But the reason to use this strategy is you want to stay in the stock market for as long as you can, because the longer it goes, the more exponential growth you're going to see at the end. Okay, that's why this is pretty much 80% of the solution. Especially, so if you don't have the time, no problem, do this. But I think ek prashna magashi somebody had said, I think Milan, you said it. How do I construct the right portfolio? How do I pick the right stock? So that's key one. And then key two is managing or rebalancing it. Example, last year, so my portfolio is kind of a mix of tech stocks, and then some financials, and some consumer, etc. It was a good mix. But last year, March, when there was a big drop, right? My conviction, for a variety of different reasons, my conviction was very high that I needed to invest as much as I can in Amazon. So late February, early March, I sold everything I had outside of my tech stocks, took major losses. Okay. And I put everything in Amazon for all the proceeds I got. That was in March. Okay. And Amazon has gone from $1,900 then to $3,300 now. Right. But so you need conviction to be able to put that trade on. But that's what I'm talking about here, is when macroeconomic conditions change, right? Then you need to modify. If this was your strategy, dollar cost averaging, and you're buying into SPY, let's say, which is great, actually, it gives you exposure, right? SPY, which is an ETF of S&P 500, SPY was up 16% last year, 16, okay? But QQQ was up 55, 60% last year. So it wouldn't have worked in your favor last year to just be in SPY, mainly because the dynamic change. Work from home stocks were significantly getting rewarded, and everything else was getting crushed. So that's what I mean by manage with rebalance when macroeconomic changes drastically, which was what happened, right, because of COVID. But in any case, no matter what you do, right, it's important to build conviction, right, to put on any trade. And that's where, Milan, that's where you're stuck, is you're trying to figure out how do you build conviction, right? So you then feel, even if you lose money on the trade, you at least know, you can understand what you need, what did you learn from it? So the next trade, you can do things differently, right?
Regarding convention, I think not only Milan, most of the people are stuck where to invest.
Yeah.
There is a lot of information, but how to take the decision, or which is the good, or which should be ignored and which should be concentrated more. So let's listen on convention.
विक्रम, आणि एक प्रश्न आहे, मी गिरीश आरस बोलतो. हे रिबॅलन्सिंग पोर्टफोलिओ अर्थात फार चांगली स्ट्रॅटेजी आहे, पण तुमच्या 401k मध्ये म्हणा किंवा IRA फंड मध्ये इट मेक्स लॉट ऑफ सेन्स. But non-IRA funds, there are tax implications. Obviously, if you sell, as you described yourself, you sold large part of your portfolio and then moved to Amazon.
Yeah.
So how did you balance that in your mind? The tax implications.
Balance करायचा प्रश्नच होता ना. I was losses, right? They were all losses. When I made that trade, everything I sold was lost because it was down 30%.
Understood. Yeah.
Right. So you have, that's important because, going back to an earlier question, is the stock market too hot? So what should I do? My mitrashi bolo, to म्हणतोय, I'm going to sell. Okay, fine, you sell that. Do you think you're going to be two things you need to understand. Ek manje, do you think the stock market is going to crash by 20%? Or the stocks that you own are going to crash by 20, 30, or 40%? Question one. And then question two is, are you going to be able to buy something else that's going to gain by 20, 30%? Because when you sell, you are actually exposing yourself. If it's a longer term, more than 1 year, it's a 20% capital gains. If it's less than a year, then it's whatever highest income tax bracket you fall into, you'll have to pay income tax on that. Not income tax, but capital gains, short-term capital gains, but it's the same rate. So, you have to think about that before you think, hey, I should sell because it's going to drop. Okay, well, but if it's not going to drop more than 20%, then you're actually going to pay the government for nothing. Right. So that's a good point. It should be thought about. So if you have gains, always weigh against, how much taxes you're going to have to pay versus how much you'll actually save if your downside thesis comes true.
Yeah, I just thanks. That's a very good explanation. Just one way I would fine tune it a bit is that tax paying is a certainty, whereas the other two aspects that you described, it has, of course, the volatility of the
probability.
Yeah.
Okay. Yeah. Exactly. That's right. So, if you know you're going to pay 20% taxes, then, and if you don't think the stock market is going to drop by more than 20%, or even 15%, then why bother? Right. But the other reason why you may want to consider that is risk, right? Is managing risk going forward. So, for example, if Amazon is a big chunk of your portfolio, okay, and you're expecting let's say it's June of 2021, and you're expecting interest rates to start rising. Now, in that case, you may have to still consider, because let's just say if it's 50% of your portfolio, Amazon shouldn't be, but if it is, or other stocks combined together, 50%, right? Then as interest rates rise, you might see the stock drop, or the opportunity cost of that money that's sitting in Amazon that may go flat or drop slightly 10%. Maybe that's better invested somewhere else. You might get 20%. So that risk you have to manage depending on what exposure is of your portfolio to these macroeconomic environments. So that's what you need to really think about.
So sorry, Vikram, Sudesh, if I can interrupt, I just want to give one example, which I think, maybe help answer Million's question also, right? So, this fear of whether where to start and where to invest. So I'll give an example of one of our, Marathi friend who was here. I think few of us know him, Ravi Kadu. He used to be here and he moved to Texas a few years back. So when he started investing, and his wife was not working here. So what he said was, okay, if I have to put her to the college and get her a degree, I'm going to spend $25,000 on her, right? So he was already into the trading. So he told his wife, why don't you learn to trade? And the amount of money which I would put on your college, I'll give that to you. I don't mind if I lose that, right? But you study the market, and he introduced her to some of his friends, and she kind of studied the market for 1 year, and then she invested that money, and eventually she learned so much that now she's making about day trading they're doing. She's making about $400-$500 a day. And Ravi was working in Accenture He took an early retirement. Now he's making his living just on stocks, both of them. So it's, again, it's not that every case will be like that, but I think it's a matter of taking risk and, putting some efforts and practice. That's what I can learn from this example.
Good, good. Thanks, Sudesh. So that's investors, right? Trader, very similarly, but your horizons is shorter. That's why I asked about the time. So you're looking at monthly, weekly, daily, and maybe you're doing options, which is another level of complexity. The thing about options is your risks and rewards are greatly magnified. Okay, so you can get rich pretty quickly, you can lose everything pretty quickly, right? It does require major time commitment. So Itepan conviction is absolutely critical, especially on trading. But then what's also important is how to get out of a trade, how to close a trade. Barachuela, people lose more money than they should when the trade goes against them, right? I can tell you, full disclosure, I have done it. When I started with options, I would buy an option, and then the stock would move against me, and then I would hope, hey, in 3 weeks, hopefully the stock will get back up there. But had I cut my losses, that I sold that option when it started moving back down, maybe I would have only lost 10%. I waited till the end, to the expiration date. By that time, that option was completely worthless, and then I'd lost 20%, right? So the key is to manage a trade whether it goes in your favor or not. The flip side is I've also lost money where I sold options. I sold options and I made money in half, so I sold an option that was going to expire in 60 days. And that option was made halfway, more than half of what I thought it would make in 30 days. And I kept it on, hoping that it would actually get more. But guess what happened? It actually went the other way in the remainder 30 days. And not only did I not make the money I thought I would, I actually lost money on it. So what's important is getting some discipline on how to manage the trade, whether it goes against you or it goes for you. This is what's critical. This is what I talked about, right? So bottom line for trading is discipline and trade management. So, but this all comes from experience. So one of the things, Milind, is that start with small position sizes. That's the biggest thing I can say. So you can do the research, pick a stock, but start with a small position size so that your relative risk is low, and understand what's happening, right? Let's say you buy, instead of buying 100 shares of Amazon, buy 2 shares of Amazon. See what the risk is, how that plays out, what is the price action, how do the dynamics work out, what are your triggers, right? It'll help you learn a lot about yourself. Is when do you end up throwing the towel and saying, okay, well, shit, everything is falling, I'm going to sell now, when you're selling at the worst moment possible. But even if you do that for 2 stocks, your risk is low. So build some reps, get some reps in with small positions. So you start to build your own confidence on the mechanics of this thing. And then you can increase the position sizes slightly, right? So that's I think that's what's. So anyway, so I'll pause. Any comments on trader characteristics?
Vikram, this is Ishwar. I would like you to have a session on options. I'm kind of doing investing for quite few years now, and also kind of swing trading for a few years now, but I have never been into options. I'm kind of scared, so would like to learn something more since you are doing already, you're already doing the options. So I would like to
Sure.
get some tips from you if you could.
Yeah, sure, no problem. That's at some point, but not today, right?
Yeah, not today, of course.
So Vikram, my question means how one can become a trader to the investor, because some might not have that much horizon of 10 years and they are means investing, and then on little higher they get 5%, 10%, they are going to sell it thinking that, yeah, I made the profit. But how they can know that what they should look, what should be target price and all?
So is the question, what point should you consider selling?
Yes. Means mostly it doesn't look. Most people don't look at the larger horizon. They look on monthly basis or weekly basis how the stock is behaving and taking the decision.
Yeah. I mean, look, unless there is a logistical reason for you to have to sell, which is you're here for 3 years and you cannot continue your portfolio, you have to go back to India, whatever, right? Unless there's a logistical reason why you have to sell, you should not sell, especially for an investor. You know, if you look at what the S&P 500 has done over the past 10 years, 20 years, 30 years, I mean, why would you sell? Right? You need to have that money when you retire. And selling means you're giving the government 20%.
Yeah.
Why would you sell? The only reason you would sell is, you know, if you're trying to rebalance, like, or there are losses, you know, there are losses, but you can gain much bigger somewhere else. That's when you sell, right? So otherwise, don't think about selling. Does that make sense, Chaitanya?
Yeah, that makes sense. Yeah, mostly people say that take that if you are making profit, sell the shares and take out the profit or and move on. Look
Move
for
on
the
to what,
next.
though? Move on to what, right?
Yeah,
That's the question.
look for the next stock or something.
Okay, so look, if your track record shows that you can make 20% or higher in the next stock, then by all means do that, right? But if you're not sure you can make 20% or higher moving on, why would you do that? Because you're going to pay 20% on that, on the gains you already had. Doesn't make sense.
Yeah.
Now on options is different, right? If you're doing options, you have to pay whatever money you make in options. You pay taxes on those. There's nothing you can do because that's all short term. And you're buying and selling by nature, by definition, options expire. So it's gone. So you will pay taxes or you take the loss, whichever.
Okay.
So I think, Vikram, I want to make one point that whether you're investor or trader, it's important that you have to have a discipline. So discipline in the sense looking at your portfolio at the end of the year. If you don't do that, then you can turn into same like trader losses. I've done that because the reason I'm saying that because I've been invested in companies, right? Like your ESPP and all. I didn't pay attention and now they are not worth anything.
Yeah.
So discipline is, I think, the key, whether you invest the time to look and retrospect your portfolio. If you don't do that, whether you're a trader or investor, it's not going to fly.
Couldn't agree more. Couldn't agree. I mean, the question I have for the team here is, do you know what percent returns you got last year on your portfolio?
I do, miss. I think for if I say the manage, it's been average. Means that's been the challenge. Another thing, if you give to someone, sorry, the background noise. If you give to someone like Merrill Lynch, let me take example Merrill Lynch. So there are Fidelity, there are Merrill Lynch. Everyone's returns have been different. If I look at the Merrill Lynch, they claim that. So I've tried different strategies. Strategy in the sense that, okay, for one, have a balanced portfolio where not too much risk. Other company tried with maximum risk. I wanted to see what the hell they can do, right? Average I see over the 3 year span, not more than 6% they have returned. I paid them 0.85 and they haven't returned like more than 6%. I keep asking what the hell is going on here, right?
You can do it. You can do it on your own.
Right?
Just buy SPY and you would get that percent return, right?
Exactly.
Without paying the 0.8%. So
yes.
माझे पण होते. I took out half and माझे पण होते, पण I don't have much anymore with money managers. I don't have much anymore with money managers. Okay, so just I was given a reminder that we have 10 minutes left. I can go a little longer if others need to, but we have 10 minutes left. So let me go to conviction, right? So, I mean, do your research, right, regarding the stock. So, understand what the stock is in, what the fundamentals say, what are the short-term signals, long-term, how was it done, etc. Right? So that's one. Second is multiple data sources, right? I mean, so me fast, CNBC or Fast Money aito, yeah, podcast or satya aito. There's like 3 or 4 things that I listen to. Everyone has their own agenda, by the way,
Yeah.
right? But you gotta listen to what they say, take different things together, and then make up your own mind as to what it is, and then based on that, you invest. Of course, listen to experts, and this is what I was talking about earlier. Start small and gain experience, whether you're winning or whether you're losing. Right? Slowly build up the position size. Don't go from a position size of 10 shares to 100. Go, you crawl, walk, and then run. But that's how you're building conviction. If it was that easy, everybody would be making money, and then nobody would be actually in the business of money management. But that's not the case. Right? It's not that easy. It can be. It may seem like last year everything seemed easy, everything was up. And then if you're trading, you have to look at the technical analysis, right? Technical analysis म्हणजे काय पॅटर्न्स आहेत, ग्रोथ कशी आहे, सिम्पल मुव्हिंग ॲव्हरेजेसच्या कंपॅरिझन मध्ये किती वर खाली चाललंय, चॅनल्स कसे आहेत, are there specific formations you see? So, but that's something you can actually go to Google and figure out what is technical analysis and what do people look at. It is only as important because all the traders look at it, right? So reality is a perception, common perception. In this case, the common perception is held by traders that look at technical analysis, so you should look at it. Okay, so comments or questions on the conviction?
So I have a question on technical analysis. So there will be analysts who are predicting, means share what their target is. How much you should emphasis on that?
That's one point, right? So listen to experts, multiple data sources. That's just one data point. That's it.
Vikram, anyone you want to recommend?
Oh, so माझ्या खूप आहेत आता. काय होतं माहिती का, मी आता फास्ट मनी बघतोय. So I follow a lot of people on Twitter, a lot. आणि मग माझ्या तसं the Macro Voices is a podcast I listen to. The Compound is a podcast I listen to. Those are the 2 biggest ones from a podcast standpoint that I listen to. So the Compound is, I really like those guys. They're really good. Basically, it's Ritholtz Wealth Management. That's the wealth manager. But these guys have really democratized investing, I think. So Ritholtz Wealth Management. I listen to those. And then there's a litany of others. So I meet Ekri, Lakshman Achutan, so ECRI. There's Lynn Alden, so she's like a big time macroeconomist. So it's like a few people, right? So the thing is, I started, okay, for this talk, I need to understand these things. So where can I find those things? And that's how I learned about these different people, right? So that's where it should be like bottom up build. You say, okay, what stock do I want to invest in? So to invest in those stock, okay, they're saying they're going to grow by this much. Okay, how do I understand whether that growth is going to be true or not? Okay, that's on the fundamental. On the technical, this stock is done, really good in last year. So is it going to go higher or not? So looking at technical and who's following that stock. So the analysts, like Chaitanya said, listening to them. A lot of different data sources.
Yeah, Vikram, Sanjay बोलतोय. मी ऍक्च्युअली ट्रेडर वरून इन्व्हेस्टर झालो. आय यूज टू डू ट्रेडिंग अबाउट 10 years ago, आणि आता वेळ नाही म्हणून नाव हॅव स्विच टू becoming last 10 years I've been investor, not so much trader. आणि मी जेव्हा ट्रेडिंग करायचो तेव्हा I used to follow 3 exchanges, right? Nikkei, London, and that used to give me some idea ki which way the market is going to move. Currently we are behind them, right?
Right.
So late night,
that's right.
Look at Japanese stock exchange, then London stock exchange. I don't know if that strategy still works.
Yeah, I think it's fair. I think they all follow each other in a way, right? So what happens in the US on Monday may be reflected in Japan on Tuesday and Europe on later Tuesday, right? So that is possible. So that's again that's one data point, right? And that's true for trading, especially if you're quote unquote day trading, especially scalping, right? You're trying to get ahead of the market. So you want to get in before there's a significant upshoot and then get out the same day. So that works in that instance, but otherwise, it's just from an investing standpoint, I'm not really sure it makes any difference.
Vikram, a quick question regarding the small caps right now. They say that during the pandemic recovery or economic recovery, the biggest like the small caps go really high instead of the large caps. So basically, they get the more visibility or valuation during this day. Do you really think that case is true? That one thing. And then since you said about the inflation will be high in coming year, how that will affect the small caps?
So, but who's that?
Mahesh.
Oh, hi, Mahesh. The short answer is absolutely yes. And it's already jale, right? If you look at Russell 2000, which is a small cap index, if you will, November pasun bag, IWM, look at IWM from November. It's on fire. So
Right.
it's already happened. Stock market is forward-looking mechanism, right?
Mm.
And so people talk about, oh, the stock market reached an all-time high, and we have when our numbers on job losses came out the worst. So there's some problem. Well, they had already factored that in 4 months ago. And so you should look at the stock market 4 months ago, what it was, right?
Mm.
So the stock market value today is showing you what they believe is going to happen 5, 6, 12 months from now, right? So if you look at IWM, it's already up 30-40%.
Mm.
That's small
It
cap.
is what, IWN or M?
M as in Mike. M as in Mike.
Okay.
IWM.
IWM. Okay, thanks.
Yeah. Right. So, and it may go even higher. So we don't know how much of that recovery has been priced in. Nobody knows that.
Right, because most of the like EV sectors, all small caps are they are like
Right.
I think what you're saying 40%, they are like 400% up almost.
Oh yeah. I mean that's right.
And
That's
it's
right.
more of like, it's not fundamental or even technical here. It's more about political and whatever Biden's policies are, but how it's going to be like more sustainable going forward, and how this inflation will affect, and how you will see a downside on those stocks. Because I'm holding like a couple of I think like 20% of my portfolio in those small caps, but I'm not sure where I should go with them going forward, and how it's going to affect with the inflation going high in near term.
Yeah, I mean, inflation certainly separately is bagal lage, but I mean, I think there's room to run for the small caps, if you ask mine. But it's not investment advice. Standard disclaimer.
That's true.
But I, so the only thing I have with a money manager right now is 80% of the money I have with a money manager is with small cap, is in small cap right now, and I'm keeping it. Okay, but that's not my entire portfolio, right?
That's good to know.
So I think there's room to run, but who knows? Okay.
One question, Vikram. So they shared. So what is your take on the EV market, right?
I mean, I think it's like Mahesh said, because of the policies, it's poised for a significant growth. Actually, Sanjay Kulkarni ने माझ्या YouTube वरती प्रश्न विचारलेला on rare earth metals, because they go into electronics, phones, electric vehicles, everything. So त्याच्यावरती मी एक full video तयार केलाय coming up this week. So you should be able to take a look at me. सगळं technical पण दाखवतोय आणि actual charts पण दाखवतोय. So the short answer is it's probably one of the better growth stories for 21.
Right, because what I'm hearing is the future is going to be how transportation will change, right? I mean,
Right.
not in cars, but
right,
everywhere they're going to have a huge transformation in that.
Right, exactly. Okay, so I don't want to hold up people on their weekends here, so I'm just gonna quickly go through these, right? So portfolio, going back to Milind and a couple of other comments, you can have an aggressive or a conservative portfolio. Aggressive, one of the most aggressive ones is ETF, which is ARK, Has anybody heard of this?
Yes,
Okay,
I'm
so
investing.
okay, you're investing in it. Okay, so that's
Yeah.
good. But I mean, ARK investment, ARK Innovation. So ARKK, they have several different ETFs. ARK Innovation is what ARKK is. That's been on fire, absolutely, absolute fire. So we don't know how it will actually do going forward, but what they do is they claim themselves, that ETF claims themselves to be looking for high growth, future high growth companies, and then investing in them. So it's kind of an actively managed. So you'll end up with 0.7% fees if you go with this. So this is one example. The other is obviously the high flyer stocks, right? Amazon, CrowdStrike. So CrowdStrike is a secular play, mainly because of cybersecurity, and then of course CRM. Those are some examples. High growth though. Emerging market. The other thing is, unless interest rates goes really high, the expectation is that emerging markets are going to do better than American markets in 2021. That's the expectation. So EEM is a emerging market ETF, and CXSC is another, just China. This is China ex state-owned enterprises, right? So excluding anything that's state-owned, Chinese companies. That's what this is. This has done really well for me last year. So those are the two examples there. And then, of course, there's speculative investments, right? Bitcoin or Ethereum and such. Okay, so that's aggressive. And then conservative, we talked about it, SPY, but then also some dividend yielding stocks, right? So you've got, utilities or consumer staples, ATT, Verizon, that give some dividends, or REITs, real estate investment trusts, NLY, which is an alley capital. And then IIPR, this is an interesting one. So going back to the other story, right? IIPR, that's a real estate investment trust that owns and operates land for marijuana. And marijuana is a growth story, another growth story that's going to keep on going. That's the expectation. So this is exploded like crazy, IIPR. So look into that. It pays a dividend, and there's capital appreciation too. Okay. Then of course there's US and European markets. So stable or developed markets exposure, you want that so that you're not taking on excess risk. So just like EEM, you got EFE, IFA for conservative. Bonds, which probably have like fallen out of favor. The 60-40 is gone. That's the headline on bonds. 60-40 is gone, and mainly because of inflation. That's why gold and silver, you got to look into that to protect against inflation. Now, the problem is that gold price action since summer has been terrible, absolutely terrible. If you bought gold in 17 or 18, you did really good through now. But since summer, part of the money that would go to gold has gone to Bitcoin. Okay, and Bitcoin is a different topic that probably requires an hour in itself. But so that's where you have to hedge yourself against inflation one way or the other. And that, classic hedge was gold. Or alternative investments, either arts or collectibles, right? So that's something you want to consider. Not many people think about that, but conservatively speaking, you should think about having, one thing that's not on here, right? Because is real estate itself, right? So you want something that's not correlated to the stock market, and that's where art or collectibles come into play. You can't necessarily buy a $5 million Degas or a Monet, but you could maybe get a slice of that. There are companies that offer shares. They'll buy a big painting. They offer shares into that painting, and then you buy those shares. So when the painting is sold, after it appreciates, you make some profit. And they claim it's 18% return. That's what they've claimed. So anyway, so that's another consideration there, right, for conservative. So again, I'll pause. I kind of rushed through that, but I'll pause for any other comments.
So one different strategy just for consideration, Vikram wanted to throw it there. Besides investing in SPY and QQQ on a fixed rate on monthly basis, what I do is I find out one ETF and probably one kind of leader in that particular sector. So one ETF per sector, and then I look for which sector is not performing well in a particular month, and I try to put money in that particular ETF for that sector because they keep changing, right? The performance of each sector keep changing. Today, energy is not doing good, but tomorrow energy will do better than all other sectors. So that's how you can probably get a better performance over the time.
So are you then just, you're not selling, you're just buying
Correct.
different things every month?
Yeah, that is in my investment portfolio.
Right, but you're not selling, you're buying different
Correct.
things. Yeah.
Correct.
Yeah. Okay. Okay. Yeah. I mean, look, that's so your thesis is that the sectors that are not doing well will do better. That's your
Tomorrow.
thesis, right?
Correct. Yeah.
Um, uh, the only thing I would comment on that is, just get some conviction around that thesis before you put money in, that you really truly believe that they're going to do better, not because they did poorly recently, but because there's something actually happening in them going forward, right? That's the
Right.
only
Right.
thing I would add.
Yeah.
Yeah. What else?
विक्रम मी आलोक बोलतोय.
Oh,
मला जस्ट अल्गोरिथमिक ट्रेडिंग किंवा रोबोटिक ट्रेडिंग विषयी कोणाला अनुभव आहे का? आणि especially for long term investing and people who want to kind of set it and forget it camp, हा ऑप्शन कसा आहे compared to conventional human involved wealth management?
yeah. But Mala, I haven't done algorithmic or robotic, but that's basically the buying an ETF every month at a certain date. It just makes it automatic. So you could do it, right? Uh, the benefit of that is you're taking emotion out of it. It's all rules based. Even if you think that the stock is going up 20%, you still end up buying that. And then even if the stock is falling like crazy, you end up buying that, right? So you're taking the emotion out. How to do that, I don't know. I haven't done it, but it's the same as essentially you doing it on your own, but still you have to pull the trigger when you're doing it on your own on a set date on a monthly basis. So your emotions will come into play depending on how the market is doing. So that's even more, takes it even further, which is automatic, robotic.
Yeah.
I don't know how to do that. I don't know. Maybe others do.
I think a lot of companies are offering that, Vikram. For very low cost, means I think a lot of companies are getting people trapped into that.
Yeah.
Instead of 0.85, they will say, "Oh, we are going to charge like 0.3."
Yeah.
That machine is doing it for you.
Yeah.
Yeah, I did actually some robotic training, but I did it for day trading more than anything else, right? So I used to just set the limit,
Right.
limit my losses, and then it'll just, the algorithm will basically, when it goes up, it increases that limit order.
Yeah.
So that's how I did it for day
Yeah.
trading.
So you used the some whatever platform you had, you put some algorithms in that platform.
Yeah, you
Yeah.
just put some rules, right?
Okay.
Yeah.
एक वेल्थ फ्रंट म्हणून आता मनी मॅनेजर साईट आहे, जस्ट लाईक अदर्स. त्याच्यात मला दिसलं आहे रोबोटिक ट्रेनिंग आणि जनरल कोणाला if anyone has done it for years and compare it to the conventional wealth management tools,
right,
and if there is an experience in that area.
Yeah, मी म्हटलं तसं मी केलं होतं 10-12 वर्षापूर्वी, but I did it only for a couple of months because you're not then paying attention, and I don't know, it was very stressful.
Yeah.
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 Thank you.
I mean, I think for trading it's probably even more stressful. Maybe investing, it makes sense, right? You're following a rule anyway. You're just automating it.
Yeah.
Right. And I mean, another thing to consider there is, in that tool, even if it's automated, right, does it give you enough knobs to, set it as per your risk profile? की तुम्हाला तुमचे इन्व्हेस्टमेंट गोल्सच्या दृष्टीने किती तुम्ही फाईन ट्यून करू शकता, going from aggressive to conservative or something in the middle. So that could be something for good option for people who don't want to actively track it, but also at some period keep monitoring and adjust it if needed.
It actually might work better for, if you are doing like a long-term investment.
Yep.
But I think day trading, I mean, it did work. I'm not saying like I made a huge loss, but there are times where I ended up making loss, and it just because it was stressful, I stopped it. But I think long term it might actually work.
Okay. Thank you.
Sure. Any others?
Mahesh again. Vikram, याच्याबद्दल काय वाटतंय? Oil industry, how it's gonna recover? The whole year last year it was on the downside. Now it's a recovery time for them too. But again, the policies, Biden policies are more alternate energy. So how do you see a future for the oil industry?
By the way, so the XLF for energy is XLE. Sorry, the ETF for energy is XLE. Along with IWM and others, it's up. So energy is really taken off since November. Everything has taken off that's in reopening trade has taken off since November, right? But now the question is, the oil is what, past for $50 a barrel now? So I think
Almost 57 now.
57, yeah. So when the economy, the electrification is not going to happen right away, right? So until then, there is some juice left still in oil. So as the economy opens, people get the money, people find a way to spend it, they start traveling, driving. I think oil probably is headed higher. But yeah, it's I would play the technicals on oil. I think it's important to look at it. I haven't recently, but just so you know, I mean, inflation was going to recharla. So I put on trades on gold, silver, XLF, and XLE. So that's what I put on trades on, right? Because of inflation. So XLE is energy, XLF is financial sector, and then actually XLB as well, materials section. So but these are all options, bets that I put on. Rather than buy, I should probably buy sometime soon. But so those are the 4 or 5 things I am putting some capital to work on for inflation.
Okay.
I don't think energy is going to go down. That's what my speculation is. I think yes, that's true, because electric cars are taking up, but oil cars are not going to get replaced pretty soon.
Right.
And
There's a certain time. Yeah.
I think the other question to ask is that what about electric? Yes, but how do you generate that electricity? So what is going to be the source for that? Is it solar going to be the one, or again some form of gas or oil should give you the electricity?
Right. Yeah. I mean, buying an electric car in Iowa doesn't make any sense because 90% of the electricity is made from coal. So anytime you're charging your car, you're actually using coal. So it's a kind of a useless proposition. But in California, that's not the case, right? There's hardly any coal. So it all depends on where that what the source of electricity is. I think as coal gets phased out, natural gas is up there, right?
Yeah.
That's probably the biggest alternative source at the moment for electricity. So, um, and then of course solar, but solar is not very efficient. So I mean that's part of the problem, right? You can't store. It's hard to store. It's not very efficient. So questions still remain.
I think California has set a target to get rid of traditional vehicles, our gas-based vehicles by 2035. They want to stop selling all those cars. So
yeah.
Vikram,
yeah.
I think we passed the 1 hour time.
Yeah.
And
Yeah.
we just going to stop.
Yeah. That's good. Hey, look, I mean, we can do these, again, right? Maybe relook at what we talked about and what has changed, right? Or other specific topics, inflation, options, someone said, etc., or Bitcoin for that matter. But just a plug before we adjourn here. Plug, if you have not subscribed, please do so and help me out. Markets, malts, and machines. So besides investment, if you're interested in Scotch, I talk about that. And if you're interested in really fine cars that your money can buy, I talk about that. So if you haven't
Vikram,
subscribed, please do subscribe.
Vikram, can I ask a question quick?
How?
Where are you finding time to do all these things?
Yeah, I have. Well, actually, I'll tell you what. Two things, right? One is most of this was done late last year, December. So that was pretty slow period for me. Super slow. So I had a lot of time. And once I've done that, the initial ramp up, now it's a matter of maintaining that. It's fine. I can do that over the weekends.
Oh, because you are spending considerable time on Marathi Shala also, right? That I know. Besides your regular job.
It's gotten easier, right? It's gotten easier in Marathi Shala. I mean, we have an extra teacher, so it's easier.
Acha. I keep wondering where Vikram is finding so much time to do all these things.
Me recruiting event like UCL ला आणि तिथे मला एक one of the candidates MBA candidates तिथे तो म्हणाला की so, because we're talking about fitness and everything. Let me tennis खेळतो. So you find time from your routine to do all this stuff. Like, you always have time. It's a question of priority. Right? So
very true. Yeah, so let's stop. So thank you, Vikram, for very useful information. I'm sure it will help others, as we saw a lot of questions. And looking forward to have another session with other investment topics. So let us know your feedbacks, everyone, about today's session and which topic to be discussed in next session. You can post comments and feedback on the WhatsApp investment group. Also, let me know if anybody is interested in talking on any other topics. So thank you very much.
Thank you.
Thank you.
Link part of the.
Thank
So if you can subscribe, okay?
Thanks.
Yeah, एक हिंदी में क्या होता है जहाँ चाहो वहाँ राह. So that is how Vikram is finding the time, right?
Yeah, Vikram is very active. Okay, thank you.
Thank you, Vikram.
Thanks.
See you.
Bye-bye.
Bye.
Thank you.
Thank you.